Hello guys, welcome back again to my YouTube channel. This is the YouTube channel of Pips Institute, and my name is Joseph. I'm so happy to be here with you guys. But today we'll be talking about top-down analysis on a ICT concept. That is how ICT does top-down analysis. So we'll be talking at it today. So if you know you're a new subscriber or a new viewer to the YouTube channel, kindly give me a subscription button because you are gonna enjoy loads of content. I mean premium content that you paid for. I mean, this ICT course I'm teaching right here, a lot of um, forex coach and trading coach, they charge millions and millions of naira and thousands of dollars just to teach you this concept, and you're getting it all for free right on my YouTube channel. And it's just subscribing by giving me a subscription button. And if you know that you love this video, then give me a thumbs up and share it with your loved ones that you know that they're having hard time trading forex, or especially those that are so much interested in trading the high city concepts. So that being said, let us dive into what we're going to be doing today. Today, like I said, I'll be looking at ICT top-down analysis by using the ICT concept. So the first thing we look at for is that personally as a day trader, I don't move beyond the 1 day time frame. So whatever the market is doing on the monthly time frame, the weekly time frame, is none of my business. I just focus from the monthly time frame and from the daily time frame downward. And as you can see, this is VIX 75 index, 24-hour time frame, which is equivalent to the 1 day time frame. I'm on trading view, as you can see. So the next thing you want to look, the first thing you want to do in your 1 hour, 1 day time frame is that you want to look out for the order flow of the market. That is, what is the direction that the market is? Is it in a bullish order flow or in a bearish order flow? Is it in an uptrend or a downtrend? So, and you want to be looking at it from the most recent data, not past data, recent data. So, if you want to look at it, the first thing you want to do is that you want to bring your, these are the data that I would advise that you look out for when you want to look out for an order flow in your, focus more on recent data alone. Okay, you don't have any business with past price action. So these are the recent data that we'll be looking at. So now let me zoom out so you can see it properly. So look at, market was moving us this way, was moving in an uptrend from year to year, uptrend. But when they got here, we saw it move up, down, and we saw this move down. So this bullish candle was not responsible for this huge bullish candle. So we had a change of character around this region, or you can put it here anywhere you want. But there's a change of character over here. So as we have a change of character, then you can say that from year to year we're bearish, right? But as you can see, market gives us a reversal again, and then it moves up. Now, at this point, we can say that we are in a bullish market. That is, from year to year, we are bullish. Why did I say why did I say we are bullish? When you look at this was the last candle, bullish candle, that was responsible for this push down. So market needs to break close above this last candle before we can consider ourselves to be bullish. So did the market close above it? Now let us check it out. You are going to see for yourself. You have to, from the week. I've taught you all this. I've taught you. Um, uh, I've taught um, market structure and change of character in a previous video. You can go and watch it. But just for the purpose of this video, so that I want to go in depth and I want to go detail. I want to simplify it so that you can understand it better. So now looking at it from here. So we can see that. Okay, let me just move it a little bit down. So looking at it from here, we can see that market was what? There was a change of character from this candle. Because this candle, bullish candle, closes above this candle. So from this candle, we had a what? A change of what? Of character. So in this candle, so we are considered that we are from year to year, we are what? We are bullish. So now we know that from the daily time frame perspective, we are bullish. So hence, we're looking at buying the market. We already know. So the next thing is that you want to do that. You want to go back to your, you want to go down to the lower time frame, go back to the 4 hour time frame. So that we'll be looking at Don't forget, on the 1 day time frame, we look at the order flow, which is the bullish. I mean, we are bullish. So on the 1 day time frame, what we're looking at we're looking at market respecting liquidities and reference points. We have two types of liquidities. We have the internal liquidities and we have the external liquidities. That is the internal range liquidity and the external range liquidity. What do we call the internal range liquidity? The internal range liquidity are those liquidity that they are they are they are in form of your buy stops, your sell stops, your 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 take profits, your this thing, your your take profits, your TP. Those are examples of your internal liquidity. So you would want to expect market to come and respect those internal liquidity. Then market will also expect the external liquidity. The external liquidity are are, are your take profit. I mean your other block, your fair value gap. So that is market moves from an internal liquidity to an external liquidity. I hope that is taken. So from here we can say that now what we're expecting market to do is that market to what? To go back to what? To an internal liquidity. So what the market then do? Where an internal liquidity, we can see it at the previous day low. Now this is this is where liquidity lies. There's liquidity here. There's liquidity here. There's liquidity here. Just keep on. There's liquidity here. Hold low and hold highs. There's liquidity here. So there's liquidity here too. So these are the places where you can find a liquidity. So you can see that market, then what market they did. So market moves from what? From an internal liquidity to an external liquidity area. So then what the market did, so then we see market moving down, taking out these liquidities. Can you see? Taking out these liquidities. So this is because market need to what? To come back and take liquidity. So you expect market to what? From a 4 hour time frame, you are expecting a liquidity grab from the market. So the market is going to definitely grab liquidity before it moves back up from an internal liquidity, before it moves back up to a place of external liquidity. Then so after the market has come back to respect this internal liquidity, the next thing is that we expect market to what? To to respect also the external liquidity, which is in form of your fair value gap, your order block, your liquidity void. Okay. So and at this point, the next thing we are going to looking out for is that we are going to be looking out for a change of character. A change of character. Is there any change of character right here? No. So we move down to a 1 hour time frame. So now looking at it from the 4 hour time frame perspective, as you can see, we are what? We are still bearish on the 4 hour time frame. Don't forget the higher time frame, our 1 day time frame said that we are bullish. So we want to buy. So we are looking for opportunity to buy, not to sell. Okay. So and what we want is that we want the lower time frame to be able, want the lower time frame to align itself with the higher time frame, so that we can, all the time frame can come together as one. So if the 1 day is saying buy, we want the 4 hours to say buy. We want the 1 hour to say buy. They want the 15 minutes, the 5 minutes to also say buy. With that, you will be in a safe position. So you want all the time frame to be speaking the same language. With that, it's going to give you an edge. You know that you are going to what? You are you are in a sure trade. You don't just want to trade anyhow. So we want all the time frame to be in alignment. So coming back to the 1 hour time frame, what are we looking at for? We're looking at for a change of character on the 1 hour time frame. Not just change of character, but we are expecting that market should go back to what? To a major area of external liquidity, like in form of a fair value gap or in form of your liquidity void and the rest. So we are looking at it. If you are not able to find it on the 1 hour time frame, I would advise that you scroll down to what, though I can see it, though I don't want to make it complicated here. I can see where market is going to respect this other block right here. Let me show you. This other block right here. This is one other block that market is going to respect. This one. And this other block right here too. So we are expecting market to respect either of these two other block, because market needs to come back to an internal range and external range liquidity also. So not just the internal range. Market has been obeying the internal range liquidity by taking buy stops and sell stops. And are you with me? So you can see that it has been respecting all these. So we expect market to also obey the external range liquidity in form of a order block, in form of a fair value gap, in form of a liquidity void. So it must respect that also, then before it then moves in the direction. So let's move down. So we are expecting either this or this, but how do we know which one to use? Let's go to the 15-minute time frame. If you are so confused on which one to use, you are going to move back to the another lower time frame so that you can get a picture of this other block very well. And don't forget, we've spoken about other block, and I gave you criteria that must be met before you can confidently say this is an order block, right? So right here we have this we have this. Let me scroll so you can see. Okay, let me just zoom out so you can see the. Okay, so this is the second. This was the second order block that we propose to use. So this was the second order block. So we have two order block that we're supposed to use. Now the 15-minute time frame is going to validate which order block to use. Okay, so if you are so confused about which order, so you go to the 15-minute time frame that is going to validate which order block to you. Now you can see that now look at market comes here, it respects the 1 hour order block, it moves up, then comes back here again, respect this 1 hour order block, right? Then moves up again. Then you can see that market start doing so. Which other block do you expect market? Let me zoom. So which other block did you expect the market to use? Actually, since market has respected this other block, then we know that this is another block that market is going to use. When you take your your Fibonacci retracement, this thing, you want to know about your premium, where this other block falls. Is it in a premium or in a discount level? I think I've made the video of of it will be right here. Now let me make some adjustments. I'm gonna take all this. I've already made the video on how to use my Fibonacci. So I just want to set this. So I haven't set it. Okay. So this middle line here is the equilibrium. So anything that falls above here, it's in a premium. So from premium, you want to buy, you want to what? You want to buy, and you want to sell in a premium. why anything that falls below here is a what? Is in a discount. So from right here, you want to sell. I mean, you want to buy in a discount and you want to sell in a premium. So you can see that this other block falls in a what? In a premium level. So you can see that market was respected it so hard, right? So the next thing we are looking out for right here now is that now that we've established that this other block is what we'll be using, why is it? Because that is a very, very strong validator block. Why? Let me clean this. Let me delete this. So this has a very, very fair value gap. Look at 1, 2, 3. So this is a fair value gap right here. I'm taking my time just to explain this so we don't have any issues with top-down analysis. So you can see that this is a fair value gap right here. So this is a fair value gap from here. So from here to here. So this is a fair value gap. So the market then comes back down, then retest this fair value gap, then it moves up again. Now, are we okay to buy now? We are not yet okay to buy. Why? Because the lower time frame has not yet conformed with the higher time frame. We want to have a what? A change of character. We must see a clear change of character. Now that market has come to obey the external range liquidity, which is in form of other block. So we are not going to buy yet. Why? Because we are yet to see a change of character. Then you move to the 5-minute time frame. Then at this junction, we are looking at for a change of character. Don't forget, this is the recent data of VIX 75 index. So this is the recent data. So don't say that I'm using past recent data. So now on the 15-minute time frame, we can see that market moved up, then come down here. Then as market breaks this level, this became a what? A change of character. This level. Please, if you don't know how to spot your change of character, go and watch my video on change of character. It's on my artistic concept playlist. It is there. So this candle right here is the change of character. So once the candle, you can see this candle broke below. So this is why we change of character from what? For this is now on the 5-minute time frame from what? From a bullish to a bearish. So we can see the market was beginning to what? To move back down. Market begins to move back down. Then we have all this a change of character right here again. Change of character right here again. Then we see market moving back down. Then we see a push down. Okay, so market keeps on pushing down, pushing up. As it was pushing up, then we see a change of character right here. Can you see change of character again right here? The market keeps on pushing down, pushing down, pushing down. So change of character right here. So market is now what in on the lower time frame, on the 5-minute time frame is what is in a bearish movement. Hence, we cannot buy yet. But what is market doing? The market is eating those liquidity. But this is where we expect what market to do. We expect market to come back to this range. Now, listen, because it's going to come back to this fair value gap. This other block. Can you see the market is around that area like we propose? So market is around this fair value gap area. So we expect market to respect this other block. So market is going to respect this other block. So market because the market moves up, then comes back down here. So it respects this other block. And one thing about this other block is that it has a fair value gap. 1, 2, 3. This is a fair value gap. Let me point it to you. I'm going basic also that I want you to understand this concept very well. So you don't have a problem with top-down analysis using the ICC concepts. Again, so it has a fair value gap in it. So it is so strong. So this market, and it is the last bullish candle. it is the lowest candle here, and look at how market moves away from it. So we just expect that market is going to come back and retest back this. So as it retest, so the next thing we want to look out for is that we want to look out for what? For a change of character. So if you can get a change of character right from this level, that is until if market should break this candle right here, this bullish candle right here. So if this candle right here should close above it, then we can consider it a change of character. Then once it's closed above it, then we expect, once it's closed above it, then we expect candle market to come back and retest either a fair value gap or this same other block again. So if it should close above this, so we expect market to either this is what we expect market to do. To either give us a fair value gap to come back into a region of a fair value gap or another block. Okay. So that's what we expect market to do. So if market should give us that movement, then we are definitely going to buy. We're definitely going to buy. But without that movement, we cannot buy anything. So this is what we expect market to do. So market moves, market to give something like this. Either back to this, that back to this other block, then a move up, or there might be something else. Why did I say that there might be something else? If market should, excuse me now, if market should go up, right? If market should do this level, it should go up. Then the next thing, if it should go up, then the next thing we expect is that if the nearest fair value gap to it. So if it forms a fair value gap, then we are expecting that the nearest fair value gap, market is going to come back and retest the nearest fair value gap. Then we see a push up. Where will be our stop loss? Our stop loss is going to be right here, below this low. Then what do we expect? We expect market to what? To go back to what? To an internal range liquidity back. So the overall trend is bullish. So as market comes back, then you want to what? You want to expect a internal range liquidity, and this is where the internal range liquidity is. Let me look at it, because I already took this. Yes, this we expect market. These are liquid, but this is where we expect market to get to, right here, this level right here. So if we buy, then we expect market to get it, because market will have to break this, get liquidity here, get liquidity here, get liquidity here, get liquidity here, then finally get liquidity here. So so we expect this is our highest take profit, but you can be taking profit as market gives you opportunity to what? To take profit right on the lower time frame. But our overall, where we expect the market to get to is here before it thinks of reversing overall again, right? So I think that is done. I think you understand now what ICT concept top-down analysis really is. I hope you find value in this video. Please, if you find value in it, kindly give me a subscribe button and like this video. Okay, please don't forget there are simple steps to this thing. Number one, go to your daily time frame. What are you looking for on your daily time frame? You're looking out for another flow. What is the direction of the market? Is it in a bullish or a bearish order flow? If it's in a bullish order flow, then you know that we're looking for opportunity to buy. Then you go to 4 minutes, 4 hour time frame. Then you're looking out for what? For liquidity zones. That is, you're looking at that the market should take out internal range liquidity, which I showed you. So once those liquidity are being taken out on the 4 hour time frame, you can be so lucky that even the 4 hour time frame is going to respect even the external range liquidity. But if it does not, then you move down to the 1 hour time frame. You are expecting an external range liquidity to be respected, and you are expecting a change of character. Am I communicating? So you are expecting an external range liquidity and a what? And a change of character. If you did not find that on your 1 hour time frame, then you zoom in to your 15-minute time frame to look out for what? For the grab of an external range liquidity and a change of character. If the market grabs the change of external range liquidity on the 15-minute time frame, then you go down to your 5-minute time frame to look out for a change of character. With that, it's going to give you a tight stop loss, and it's going to give you a high risk to reward ratio. I hope you are clear with that. So once you get there, even right on your 5-minute time frame, you are still going to see a better trade entry, because like you saw on the 5-minute time frame, that you saw the market respecting even the 5-minute order block. So we expect that the market is going to respect the 5-minute order block. Can you say that market respected this 5-minute order block, like I told you? So once it moves up, if the market should close above this, then you're expecting the market to what? To come back and what? And retest this order block before it moves back up for what? So you can start taking your profit gradually, or you hold on for what? For the larger share of the take profit on the 1 hour time frame, which is even equals to the liquidity zones, the internal range liquidity zone on the 4 hour time frame, which is around this level. I hope that is taken. So I hope you've learned one or two things on on what you've been taught. I As I come away next time, keep making the market and keep giving the market makers a hard time. Bye bye.